All right, everybody. So we're going to take a look at a trade. It's not a big move, and then I'll go into a lesson. So it's this move in crude. All right. So basically, the market had a rally here. It was going down, right? It was going down, right? And then you had this. This is the biggest in. It's the biggest price and volume in 6 up waves, but more importantly, a 2 times average buying activity, meaning 2 times average up volume, right? 2 times, between 200%. All right, so 2 times average, you can see the 2.0, right? So, and then the 6 and the 6. So, right here, the 2.0. That's 2 times average up volume, and this biggest in 6 up waves, and the biggest volume in 6 up waves. So I knew that the buyers are coming in. It's a no-brainer. Probably they're covering their shorts at support, or I don't really care as long as there's buying activity. So this buying activity came in, broke above this high, the nice bar, we absorbed it, broke out, and went up, and then pulled back, and then when it pulled back to the low bar, which is basically the demand zone. It bounced, and then it had low volume pullback, and then it gave one rally. So some of these moves are really crappy, but you can still capitalize on them. And although there wasn't a big trend, the risk reward is almost 4 to 1. All right, it's over 3 to 1. All right, so this. This is just, you see, it's going down, 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 down. Buying activity comes in, big buying activity, evidence of price volume, indicating demand, and low volume pullbacks and a reversal. So this is buying activity here, and market goes up. Why? Because supply dries up here and here. And that's all there really is to it. So now I'm going to shift into explaining the details here of very important concept. All right, so let's get into it. All right, so the first thing I want to explain is that what are the supply and demand dynamics that create a trend change or a turning point. So what you'll see is typically, let's just view this, all right? Price goes up, price goes down. Here, you have reaccumulation. Then price goes up, and it goes down. And price goes up, and it goes down. So reaccumulation will occur here, here, here. Then you have selling pressure up here. All right? Now these are all turning points, and from my understanding, and I'll prove it, is at these turning points, up here, down here, up here, down here, up here, down here, you basically have your accumulation or reaccumulation. Let's just use those words interchangeably. The difference is that accumulation is typically a big base at the bottom, and the reaccumulation is the pullbacks in an uptrend. All right, so up here you have distribution or minor distribution here, 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 and down here you have some minor accumulation or reaccumulation at these lows. But what's really important is what is causing these moves, these turning points. So when we talk about turning points, we want to immediately think in terms of supply and demand. So from a supply and demand perspective, what's going on at, for example, these lows, right? So what is happening is typically 2 scenarios. The first scenario is supply exhausts. So supply exhausts is identified by very low volume. So it goes down and supply exhaust. Before that, it may have a minor climax, which is heavy volume, but the retest will show low volume. It is when there's low volume that's the exhaustion. The climax is what exhausted supply, but the actual exhaustion is identified by low volume. Climax may have led to the exhaustion, right, because it was a high level of exertion, but the point where the market is exhausted is low volume. All right, low volume because they just don't want to sell anymore. They've already sold. They just don't want to sell anymore. Okay, so that's one cause of why the price reverses. Low volume. I'll just put exhaustion. All right. Now this, a lot of times you can't really make heads or tails of whether it has exhausted or not. You can see the volume and all of that, but you don't really know. All right, now without using like order flow techniques, you don't really know. All right, the other thing, what I want to focus on, is reaccumulation. Very important, reaccumulation. In the first scenario, you have low volume. In the second scenario, you have high volume. And the reason for this is because demand is making a stand. Demand is entering. All right? So reaccumulation here, 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 you have indication of it because of high volume. All right? Now, that high volume reaccumulation, one evidence of it is the principle of effort reward. All right? Now, what happens is there's a lot of volume, but because demand makes a stand, price is unable to go down. So that's the evidence for reaccumulation. All right, so this low, that low, these three lows, 1, 2, and 3, it's very likely that they have some effort reward or reaccumulation. All right, now, yes, it can be because of low volume here. You have a low volume pullback and price goes up. That is possible as well. But it's also possible that you have the second scenario, reaccumulation, and that will show its hand as effort reward. All right, because demand steps in, and doesn't it make sense? If demand steps in, price goes up. If demand steps in, price goes up. If supply steps in, price goes down. If supply steps in, price goes down. If supply steps in, price goes down. It makes so much sense just by taking a look at the turning point and asking yourself, why did the price go up? Answer is demand stepped in. What is demand stepping in? Accumulation. What is supply stepping in? Distribution. All right. Now this is different than major accumulation and distribution, which is, you go down and then boom, then go up, and then there's some accumulation here, right? Then you have this distribution here. That's major accumulation distribution. All right, that's at massive, big time frames and all of that, or at the top and bottom of trends. That's what I'm trying to say. Now, on its way, you have minor reaccumulation and redistribution, and believe me, this is nothing more. When I say accumulation and distribution, accumulation is just heavy volume buying at lows. That's all it is. At lows. And distribution is selling at highs, which is also identified by heavy volume. Heavy volume selling at highs. Pardon the the penmanship, but you get the idea. All right. So what we're looking for is accumulation. Why? Why are we so, as white coat traders, why are we looking at accumulation distribution? And the answer is because we know that after accumulation you get markup. Markup is what you're after. If you have an objective in the market, it's to get markup. And after distribution, markdown. If you have an objective in the market, it's to get markdown. So your objective is to get markup and markdown. That's what your objective is as a directional trader. You try and get markup and markdown. That's the only way to make money as a directional trader. Only way to make money as a directional trader is to get that markup and that markdown. But the prerequisite is you must have skills to identify accumulation and distribution. What is accumulation and distribution? It's just heavy buying at the lows, and distribution is heavy buying at the highs. The mistake folks make is, trying to classify every trading range as accumulation and distribution, not realizing that sideways movement is just sideways movement, that it's not accumulation or distribution unless you have evidence of heavy buying at the lows or heavy selling at the highs. And what do I mean by that? Of course, low and high is relative. If you have this, right, boom, there was distribution up here. So this is relative to the trend. But this right here is also distribution, but it's called redistribution because it's a high relative to this low. So this is a redistribution because it's a high relative to the low. This is distribution because it's a high relative to the trend low. This is distribution because it's a high relative to the rally low. All right? So anyway, the point is accumulation and distribution very important because accumulation is heavy buying at the lows and distribution is heavy selling at the highs. All right, now why am I making these points and how is this going to help you trade? All right, so that's what you want to know, and that's what I'm going to show you and how to do it. Practically, by the way. All right, so when the market rallies and it pulls back, I'm assuming, that your objective here is to buy pullbacks. I'm not talking about breakouts, I'm talking about pullbacks. We know that on pullbacks, you have reaccumulation. So that is what we're going to look for. On the pullbacks, we're going to look for reaccumulation. We're not just looking at, Fibonacci or 50% back or demand zone or whatever. Although those are areas and levels to look for reaccumulation, right? Those are areas and levels to look for reaccumulation when they pull back and test the demand zone or a breakout test of a breakout. But our thing is we're looking for reaccumulation on the pullbacks to these levels of interest or levels that we want to trade. If there's no reaccumulation, then you don't want to just jump in because it'll just do this. So how do we do that? Okay, this is an important question because we know that accumulation, as I've explained to you, is heavy buying at the lows. So this is a low. Right here, we're going to look for accumulation or reaccumulation relative to this high. This is a low. And relative to this is a possible higher low. So here at this level of interest, this whatever you want to call it, test of a breakout or demand zone or spring or whatever, we're going to be looking for reaccumulation. All right, we want to see the footprint of the composite man. And I've already explained that it's heavy buying, and that buying is obviously indicated by heavy volume. All right. The other situation is when you have light volume, right? When you have light volume, you can't really detect reaccumulation. Light volume will tell you that there's no supply, but does not tell you that demand has entered. It says it's a judgment on supply saying that the supply has dried up, right? It's dried up, but it's not a judgment on demand coming in and the purchasing of inventory at this level. What I'm talking about is a purchasing. All right, so for that we need high volume. So one thing that we're looking for is high volume prints on the pullback. High volume prints on the pullback will be an indication that yes, there is possible heavy buying. Okay. The next step is to look for effort reward. This will help you see the high volume, but you also see the effort reward. Why? Because this is a very clear indication that this is buying activity. Why? Because you have all this volume and it's not going lower. Why? Because buyers stepped in. One side wants to sell and the other side wants to buy and will not let your price go below. Will not let your price continue down. That's why effort reward is it's a manifestation of accumulation and distribution. Effort reward is a manifestation of accumulation and distribution. And now I'm going to prove it to you on the actual trade and show you. All right. Now for this, what you need is you can use any type of chart that has price and volume. When you have a chart that has price and volume, please actually read the damn chart in terms of price and volume instead of looking for flags and pennants and stuff like that. All right. So now I'm going to show you using a type of chart that was invented by Wyckoff called a tape reading chart. Right? You can use any chart that has price and volume. I just use it because I know what Wyckoff did, and I just modernized it, for today's action, for today's conditions. Because obviously you have different conditions now, right? But the idea is the same. All right. So I see this rally, right? This high volume activity. It's pulling back. It's going to demand zone. Right? This is the demand area. So what do you think I'm going to do over here? Obviously, I'm going to look for reaccumulation, right? Just like this rally, as it's pulling back, what do I want to do? I want to look for reaccumulation. If I have this rally and pull back, I want to look for reaccumulation. If I have another rally and pull back, I want to look for reaccumulation. My skill, my entry depends on whether I can see that big participants are buying. All right. So you have a rally, pull back. Where's the reaccumulation? Is there any reaccumulation? If there's no reaccumulation, I have no idea whether the market's going to continue to go up. I have no idea. I don't know if it's going to go up. However, if I have low volume, then that's another indication that the market will go up. Why? Because the force of supply has diminished, and that means that the trend will continue. Very likely the trend will continue. So these two things is what you want to look for on pullbacks. Specifically, I like reaccumulation because I know that they took positions, and if they take positions, I want to take positions. Low volume is fine too, but I want to see trend and buying in the background and a nice reversal before I enter with ease of movement. All right, so we'll just take a look at whether there's reaccumulation here on this pullback. This is the rally, the change of behavior or rally or whatever, right? Comes down here, bang, now it pulls back. I need to detect reaccumulation here. For this, there are many different techniques. I don't know them all, and I don't need to know them all. So I'll just use what I use, and I'll explain that. But you can use whatever you want to use. The key is you have to have price and volume, and you need to know the principle of effort reward, because it is a valid way of reading a chart that has price and volume. It's a very valid way. There's a lot of material out on volume that's overcomplicated, calling it fuel for a car or some weird, some analogy. All it is input. Volume is the input. Price movement, meaning the amount of movement, is the output. they should be in proportion. When they are not in proportion, it is a possible indication of accumulation or distribution. I'm going to repeat that. Volume is the input, price distance is the output. When they are in proportion, it is supposed to be in proportion. It is the default state. It should be in proportional. When they are not in proportion, it is evidence of demand or supply coming in. If it is evidence of accumulation or distribution. So I'm looking for, on this pullback, for volume and price to not be in proportion as an indication of accumulation. I'll repeat that. On the pullback here, I'm looking for accumulation, and that will be identified by seeing volume is not proportionate to price distance, price movement, giving me an indication of accumulation. All right, so now let's take a look at that. This is the Wyckoff tapering chart, and let's just go to crude. So you see the rally, now it's pulling back. Rally, pull back. Rally, pull back. Now we use our skills as real Wyckoff traders, not that garbage online, because that stuff is not Wyckoff. It's make-believe. I'm just being real with you that, there's a lot of stuff online which I'm shocked at because it's not even in the Wyckoff literature. So what are we doing? Rally, now pull back. We're going to be looking for accumulation. Accumulation, one easy way to identify it is effort reward. Effort reward is a manifestation of accumulation, and it is identified by volume and price not being proportionate. Why? You have more volume and less price movement. Again, you have more volume, less price movement is going to be an indication of effort reward, which is a manifestation of accumulation. So as it pulls, as it pulls back, we're going to look for that. Okay, pulling back, pulling back, pulling back. How do we look for that disproportion? How do we look for it? You're going to have a lot of volume, but not a lot of output. You have a lot of input volume, but not a lot of output. Output in terms of price range. Okay? So we see here, you got a lot of volume, you have a lot of price movement. So is that effort reward? No, because they are in proportion. You have increased volume, increased price movement. That's not effort reward, that is ease of movement. So there's no indication of accumulation here. At least not by reading input and output. This is the input, that's the output. Volume is the input, range here is the output. We don't see, we see it. Although this print is making me very interested because I know that as it's coming down, the print is increasing. Okay, so I just keep that in mind. But what I'm clearly looking for is an increase in the volume input and a decrease in the price output, its range decreasing. All right, I don't see that here, although I see a big print. That makes me interested, but I don't have enough evidence yet. So it continues, it continues, it continues, it continues. Again, I see a big print, right? I don't see the proportion yet, meaning big volume, little range. I don't see that, but I do see the prints are getting bigger. I know something's going on. All right. I don't see clearly effort reward accumulation yet, but the big prints are talking to me, especially when the big prints don't have a lot of follow through to the downside. They are talking to me. Big prints with not a lot of follow through are telling me that the big prints are close to the bottom of the column. And why would someone be selling near the lows, not the highs? Why would someone be selling near the lows, not the highs? They're buying. But still, I don't see it in terms of effort reward here. I don't see big volume and little output, but I do see the big prints not having a lot of follow through, telling me something's up. All right? Because they're basically buying lows. Right? That's what's going on. All right. Here I see this big print and I see a price going up. If this is selling, price would be going down. It's going up. Why? This guy bought everything, forcing price to go up. Okay, I have that in mind. But I still don't see effort reward. Where I finally see it is right here. The other two just set things up because this, I'll explain the other two, but this is the clear example right here where you see this 15, right? This volume here is bigger than that green volume. This volume here is big. It's like 3 times as big as the volume prior to it, but look at the output. Is the output 3 times as big as the prior output? Is the range 3 times as big as the prior range? The volume is 3 times bigger than the prior volume. Why isn't the range bigger than the prior range? And that's because you have effort reward. Effort is here, the volume, reward is here, the output in terms of price range. And that right here is the clearest evidence of accumulation. As price hit this low, they bought it all up. How much? 2,000 contracts. That is the biggest print in this entire structure since this low, since this print. From this low, going up to going down, that is the biggest print. And that is accumulation. Why? You have a lot of volume, but it cannot go down. You have a lot of volume and this. Not a lot of output. So what happens as a result of that is the judgment is made that this is accumulation, and it's a correct judgment because after it, bang, price goes up. Price goes up. Right? Price goes up. Now with the same logic, with the same logic, what do you think this is? That 57 at the top. What do you think that is? When you have that much volume, which is like 3 or 4 times the prior bar, and the same output as the prior bar, isn't that disproportionate? Well, that's minor distribution. Someone's selling that high, and that's why price pulled back. So that's important for you to know. As Wyckoff traders, you gotta know this. All right, you gotta know this as Wyckoff traders because it's gonna help you buy pullbacks where there is reaccumulation. And I've shown you clear indications of reaccumulation. And one easy example of some distribution that's creating the turn at the top of a rally to pullback, right? So, what did I do here? Okay, all right, so we see the way we're reading this is volume, price, input, output, okay? That's what you've learned. to identify accumulation and reaccumulation, especially on pullbacks. And the second thing is, when you have a print, a high volume print, but price is not following through to the downside, someone is making a stand. Someone is making a stand. Because the volume, if it is supply, like right here, if this is demand, it should have follow through. Demand does not come at tops, it comes at the bottom. It's common sense. Buy low, sell high. No one's going to buy high. So when it's up here and near the high, then it's supply. When it's near the low, it is possible demand, but we confirm it by price going in the opposite direction. Meaning here we see that this heavy volume at the top, and I would say this is supply pressure. Why? I don't know that. All I know is that there's no follow through, and then it goes down. So clearly this is evidence of distribution. Why? Someone's selling a high. Here, they're unable to break down. Someone is buying the low. I confirm that because the bar after it, price goes up. Price goes up. Meaning they buy low, forcing price to go up. And they sell high, forcing price to go down. Sell high, price goes down. Buy low, price goes up. When it retests, buy some more at the same level, forcing price to go up. Okay? So you learned two things here. When buying pullbacks and you're looking for reaccumulation, you want to see, basically see two things. The first is effort reward, which will be identified by high volume and the lack of price distance. A lot of input, not a lot of output. Effort reward is a manifestation of accumulation, and it's evident here. The second thing you'll see is large volume prints without having price go down, indicating that they're buying the lows. Like here, they're buying the lows. If this was supply, price would break down and there would be continued downward price movement. But since the high prints are at those lows, means they're buying the lows. So when you're looking at a pullback, you'll see both effort reward and these high volume print near the lows without follow through. All right, I've explained it as best as I can, and work with this idea, and just whatever chart you're using, just look for it. All right, take care. Bye.